my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. So it is once again this time with a new year under my belt and with great comfort to me, even after the recent falls, rises and now even more recent falls once again, that this market has still kept within the broken May to October 2020 bullish shift pitchfork that was originally drawn now easily over a year ago. To recap some of the recent significant actions, late September saw a halt to a decline, stopped dead by the lower time, currently 2212 of this same broken May to October 2020 bullish shift pitchfork. The halt was actually a team effort made from the combination of the lower time plus the slowly rising long moving average, currently at 2265, and the big 50% Fibonacci lines of the March to August 2021 move at 2160, plus the February to 2018 to March 2020 move at 2128. The market consolidated and in early October 2021 rose back up through the middle time, currently at 2382, and all the way up to the upper time, currently at 2552 and off the top of my daily chart, where it peaked in late October 2021, causing some congestion between 2443 and 2449 as well as the upper time. This was the peak and end of the previously oft-mentioned diving board platform pattern. Since then, we've had a topping action. Initially, within a small bear channel that petered out in mid-November 2021, and then properly in early December 2021 when prices once again visited the long moving average below, as well as the key 50% Fibonacci lines of the June to October 2018 move at 2221. Now since early December, we've seen prices rise up into the start of the year, and 2 weeks ago peak at the combination of the middle time and the 50% Fibonacci of the big old 2010-2011 move at 2378. Since then, we've made a sharp move lower through all the moving averages, such that yesterday we closed with a bearish closing black Moroboso below the 50% Fibonacci line of the June to October 2018 move at 2221, and perhaps more importantly, with a second consecutive close below the long moving average. This is the first time the market has done this since late September last year, and it now threatens the lower time once again. Take special care over this, as it needs at least two consecutive closes below this lower time. Probably more in actuality would be needed to break it. The market tried back in late September and failed. Just take care this time. With this in mind, I've drawn a new, untested, bearish late October 2021 to late January 2022 Andrews pitchfork. The market is currently close to the middle time, currently at 2204, though today's action so far has been a recall from the bearishness seen last week and on Monday this week. Yet over all of this, it is worthwhile remembering this one key factor. This broken May to October 2020 bullish shift pitchfork that has been so effective at guiding the market higher is still, after all, a bullish shift pitchfork. And until this bullish shift pitchfork is truly destroyed, then it will still guide this market higher all the while. LME 3-month tin. I'm sorry if you've heard this first bit which I'm going to speak before, but it is so necessary, I'm afraid. So here goes once again. I've been repeating this bit again and again for months and months now. It is this. The overall bullish incentive is still alive and well and strong here. This was and is because the original move up within the January to March 2021 bullish shift pitchfork that started back in March last year and then translated to a higher level in April 2021, resulting in prices moving up over the middle time, which is currently at 4630 of this bullish shift pitchfork. Well, prices even managed to reach up and over the upper time, currently at 43,010 back in July, August, mid-October, mid-November 2021, as well as last week and even today. Yet in all that time, the market has always tended to come back within the folds of this same bullish pitchfork. In all the time since March last year, this bullish pitchfork had and still does drive prices higher. Now, admittedly, I, and I am sure you as well, believe that no market can head in one direction all of the time forever, though this metal is giving a pretty good impression of such a market. This is why we saw major corrections back down in August, late September, late October, even last week. It's important to note that despite these corrections, the market in all its pullbacks down, has never ever managed to break this same bullish incentive. And that's been seen here since March last year. The evidence for this can be seen by how the market is still today within this bullish shift pitchfork. We are currently in between the middle time below, currently 46.30, and the upper time above, currently 43.010. Another point to note, and this may become very important, is if the lower time, currently at 35.475, is challenged, then one should take into account how this lower time has been married to its long-term partner, the rising medium moving average, currently at 38.115, since at least August last year. It may well be that if we see a separation of these two, between the lower time and the medium moving average, then perhaps, only then, may we start looking at the bullish incentive as maybe finishing. This is no more than conjecture on my part at this time, but it does have a certain symmetry to it. So, I suggest special attention to those two. However, the most recent action indicates a possible fresh attack on the upside for new and only briefly tested and more acute January-based bullish shift pitchfork that has seen good work last week and this week as well, between the lower time below, currently at 41.560, and the middle time above, currently 43.380. This is something also to watch. This brings me once again to my final point, the same final point which I've repeated now from previous commentaries many, many, many times. It is this, and I quote, "It can be hellish to rely on only one pattern because it can be hellish when it breaks." End of quote. So that's it. That is where we are now, once again. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.